My special guest today is Michael Wang. Michael is the Chief Executive Officer of Prometheus Alternative Investments and a veteran hedge fund manager. Prometheus Alternative Investments is a first of its kind research platform that gives everyday investors the ability to research, follow, and learn from investment professionals. Before Prometheus, Michael worked with Steve Cohen's former hedge fund, SAC Capital Advisors, that is the hedge fund that the show Billions is based on. He was at Tour Billion and Cyprus before that. Welcome to the show, Michael.
Great. Thanks for having me, Andrew.
Yeah, my pleasure. Can you start off by telling everybody your background? It sounds pretty interesting. You've got a lot of experience in this industry. Just give us your version of it and then why you founded Prometheus.
Sure, absolutely. So I started off as an investment banker doing mergers and acquisitions at Citigroup. I like to call it Shitty Group sometimes, but in any case, after that stint, I joined SAC Capital, as you alluded to. That was the hedge fund that the show Billions was based on, and Bobby Axelrod from the show is actually based on who I used to work for, Stevie Cohen. So I was at SAC for about 5 years and helped grow one of the larger portfolios there. And then in 2012, I left to join a guy named Jason Carpenter launching a hedge fund called Tourbillon Capital. That was a long short equity fund. Helped grow that to about $2 billion before I left New York City in 2015 to move to Los Angeles, where I am based currently. And I came here to take over the oldest hedge fund still in existence, a fund called Cypress, which is started in 1969. Obviously not by me, but my partner Robert Day. I ran Cypress for about 5 years, and after that, decided I wanted to leave fund management to pursue this idea that I had for quite some time to essentially democratize access to hedge funds, venture funds, private equity, etc., and not just give people access to a great product that they probably hadn't access to before, but there's a large educational and a social and content component to what we're doing.
Yes, tell us more about Prometheus. You're following along at home. The website's prometheusalts.com. So, how is this different than everything else that's come before it?
Sure, sure. Maybe I will start with the marketplace first. So, what is Prometheus in a nutshell? It's a social marketplace for alternative funds. So, on the marketplace side of things, what we're trying to do there is make it easy and frictionless, whether you're a high net worth individual or an institution, to be able to transact in alternatives, whether that be hedge funds, venture capital, private equity, etc. And now we're focused on funds, not direct investments, but funds, because we believe that most people in the world aren't investors themselves. They're doctors or lawyers or entrepreneurs, etc. And they're better served putting most of their capital with somebody who is doing this on a daily basis, who's a professional. All right.
Right.
And so our goal there on the marketplace is also to massively increase the total addressable market of the alt industry, which today is roughly about $14 trillion, but entirely owned by large institutions.
Mm.
And many of these institutions, like endowments, pension funds, et cetera, they already have half their portfolios in alternatives. So there's not much growth or penetration left to go in that realm. However, high net worth capital globally is some $170 trillion with very low penetration in alternatives. So think of how many high paid engineers, doctors, lawyers, entrepreneurs you know that are accredited, and those are legally able to invest in alternatives. But my guess is most of them probably have close to 0% of their assets in hedge funds, venture capital, private equity, et cetera. We want to change that. And so there's a big opportunity there, huge white space that we're tackling. No matter who you are, whether you're a high net worth guy, a family office, an RIA, the amount of alternatives that you're going to have in your portfolio is only going to continue to grow over time. And so lots of opportunity there. And how that social piece fits into this equation is that it serves as a safe and professional platform for these folks on Wall Street, these fund managers, to actually feel comfortable posting content, because most managers do not post on a Twitter or TikTok or Facebook, etc. And there's a few different reasons why. Number one is compliance. And this is why we've built in some compliance gates into our platform to address this issue. Number two is it's very difficult to build an audience on Twitter or any of these other social platforms right now for a manager, because you're competing against a million other topics under the sun. You have housewives posting on one end, celebrities posting on another. Just these aren't the right platforms for a pro on Wall Street. And so, whereas when a professional posts on Prometheus, it's hitting a very targeted demographic. Allocators from institutional allocators, family offices, RAs, down to high net worth, and then also other fund managers as well. It's a very targeted audience directed within the finance and business sphere. And then lastly is for these managers, there's an incentive to post content. And that incentive is you could actually raise capital on Prometheus. You can't raise capital on LinkedIn or Facebook or Twitter or any of these other platforms, right? And this social platform really, from a very broad perspective, is to be that only place where anybody can go to be able to access insights directly from the pros. So instead of going to Wall Street Bets or Discord or Twitter to get your investment insights from some anonymous 19-year-old kid that probably has no experience whatsoever, come to Prometheus so that you can get insights directly from some of the best investors in the world.
Right. Okay. So
And it's free.
Right. You're solving, there's two angles, two problems you're solving. There's the investor who doesn't have access to alternative investments. They're a dentist in Kansas or something, and they've got ETFs, they've got real estate or something like that, but they don't have any way or any connection into like a hedge fund or something like a private equity. They want to get involved. They can come to your platform and find that. But if you're you're one of those investment funds, you're an alternative fund, you want access to that dentist in Kansas, and you have no way to meet them other than by going out on some very huge, massive platform. Am I kind of describing it correctly?
That's exactly correct. And one thing to note is that most fund managers, and there's about 15,000 alternative fund managers out there across hedge fund, private equity, and VC. The vast majority of these fund managers never get discovered. Mm-hmm. And that's because it's such a fragmented industry, and over 100% of the net inflows of dollars into the alts industry only go to the big boys, right? The IBMs of the alts industry, the Bridgewaters and Citadels and Sequoias of the world, which leaves the other 14,900 funds fighting for the scraps. I wanted to build a platform so that these managers can build their own exposure through content and use content as a means of lead generation. This is no different than, say, a Louis Vuitton or Porsche posting content on Instagram and using that as a form of lead generation so that folks can follow them, build trust in the brand so that they'll buy their products. We're doing the same thing for fund managers. So allowing that dentist to be able to discover these very talented fund managers that they otherwise probably wouldn't have discovered on their own.
Right. So the idea is the fund managers posting content. Can you talk a little bit about that content that these folks that are looking for alternative investments, they're consuming? Is it, this is the stock I'm investing in, or this is my strategy? Can you talk a little bit about what kinds of ideas they're sharing to generate that interest in their fund?
Yeah, certainly. So maybe from just to back up and zoom up a little bit. So when you make an allocation decision to a fund, it's really based on getting to build trust in the manager. You're really building, you're really investing in the manager, right? And so how do you build trust in the manager? Well, it's through content. And so this content on our platform spans from talking about your views of the macro, what's going on in the markets today in real time. What's the impact of increasing interest rates on the markets, themes, ideas, specific ideas that they may have. They'll talk about longs and shorts that they like. If they're running a long short equity hedge fund, for instance, if they're a VC manager, they may talk about some of their portfolio companies. They may talk about their investment process. They may talk about their origin story. So content spans across many different categories on our platform. But the most important thing is that you're really getting to understand how a manager thinks about the world, how they think about investing, and what sets them apart from others.
Gotcha. So I think this is a common mistake that people make, is that they should be picking stocks themselves. And so the next logical conclusion is that they should just buy ETFs. And it's like, that's the only thing they're going to invest in, right? But you're kind of saying, well, sure, there's a place for ETFs in your portfolio and broad diversification, but most individuals, they're not able to get alternative investments as part of it. And that idea that building trust in who you're going to pick to do that for you is probably something that a lot of people haven't even thought about before. And so is that relationship kind of cultivated on the platform over time? Is that like you start following the ideas and you're learning more and more about that manager, and then you're like, you know what, this is the person that could manage a portion of my portfolio for me?
Yeah, and I'm going to tell you something. When you start following a manager's posts, like Josh Galtry, who runs Jag Capital on Prometheus, he posts multiple times a day. You really get to understand the manager and his thought process on how he evaluates ideas, how he finds ideas, and how he puts together a portfolio, how he risk manages, and all this other stuff. So by following a manager for a period of time, whether that's a month, 2 months, 3 months, etc., you'll get to understand, hey, this guy really knows what he's talking about. Let me check out his fund and let me learn more about his fund, and then maybe you make an investment decision, after the fact. To your earlier comment about retail. The retail community right now, what do they have access to? They have access to traditional products generally. That encompasses stocks, ETFs, bonds, treasuries, all that type of stuff. So the alternatives world revolves around everything that's not traditional, right? Including hedge funds, venture, etc. And so then the question is, well, why would somebody want to invest in alternatives? What's the differentiating factor of alternatives? Well, the main differentiating factor is that they're not correlated a lot of times to the broader equities markets. They're not correlated to the broader economic cycle in many instances as well. So for instance, this has been a very tough year for obviously stocks, ETFs, bonds, everything, in the traditional world. And if you're a retail investor, it's likely that you've lost a lot of money this year, okay, trying to do this. But many of our funds on our platform are actually up. In fact, we even have one manager that's up 90% this year. I think he's probably the best performing manager on earth right now, and so that is one of the biggest and most compelling characteristics of alternatives is that you can find asset classes to invest in that don't correlate with the rest of your portfolio.
And that
And
represents diversification, really. The lack of
exactly,
correlation.
yeah. And diversification right now, how traditionally people think about it in the retail world is, let me buy 20 stocks and just putting all my eggs into one stock. Well, that's not true. And the reason is very obvious is because there is a heck of a lot of correlation between stocks, between sectors within an ETF, so if the broader S&P 500 is going down, so is the healthcare ETF, so is the Qs, the triple Qs for tech stocks, and so is biotech, everything else, right? So you think you're diversified. However, if the market goes down, everything in your portfolio is going to go down with it because there's very high correlation,
Right. That's a concept I think that if you're an accredited investor, you might know about that, but retail investors probably don't even consider this. Can you talk a little bit about if you didn't have Prometheus as a way to promote yourself as an investment manager, and this was you did this job for years.
For many years, yeah.
How do you raise capital without a tool like this? If you're not going on social media, is it just a networking? You're like going out to dinner and trying to meet people? How does it work?
It is number one is it's extraordinarily difficult. And most managers, the vast majority of managers have this issue. They all want to raise capital, but they all have a difficult time. Generally, most of them outside of the biggest funds have a lot of difficulty raising capital. And it's because whether you're a small emerging manager or you're a large manager, before Prometheus, you're going after the same clientele. And who's that clientele? Well, it's these institutional allocators, the guys at the pension funds and endowments and stuff like that. And the reality is that the guy sitting at the endowment and the pension fund really has no incentive to invest in a talented emerging manager. Okay, instead, they invest in Bridgewater because they know that no matter what, even if Bridgewater has a very dry spell of performance, which they had for pretty much a decade, they're not going to get fired. Again, it's sort of like that saying with IBM, nobody gets fired for using IBM. It's the same thing in the alts world. So what we're trying to do is turn it on its head. There is one of the attributes of the alt industry is that size is the enemy of performance. And what does that mean? It means that the larger you are as a fund, the harder it is to generate high returns. Right? Much easier to generate returns when you're running $50 million than it is when you're running $50 billion, obviously, right? Very intuitive. However, because of the nature of our industry, and what I just spoke about with institutional investors, they tend to be risk averse. They don't want to get fired, et cetera. They tend to pick these, sort of larger, more boring, and quite frankly, worse performing fund managers. And so what we want to do then is we want to surface these talented fund managers. Many of them are running sub $1 billion. Most of them running sub $500 million. And they're generating performance that you wouldn't even believe. Some of these guys are generating returns of upwards of triple digits on an annual basis. Wow. Crazy returns. These are guys that aren't household names. You never would have heard of them before, outside of having a platform like ours, Prometheus, out there.
And if I'm investing in a fund, I'd rather have them spend time on investing than going out and trying to convince folks to bring their assets under management, right? Like, isn't that what the fund managers want to be doing? They don't want to be chasing capital with their time.
Yeah, they want to spend, most fund managers want to spend 95% of their time focused on their portfolio, focused on investing. However, because most managers are, sub $500 million managers, let's call it, the portfolio manager is also the IR person, right?
Yeah.
And so this is also why it's very difficult for managers to connect with smaller investors like a doctor or a lawyer, or even an RIA.
Yeah.
And it's because it makes no sense for the manager that is limited on time and resources to try to find every doctor he or she knows to get a $50,000 check. Makes no sense. So again, previous Prometheus, then they would try to go after that institutional capital, which generally they always lose out on when they're confronting against larger organizations like a Bridgewater or Citadel.
Right. You mentioned it was intuitive why a smaller fund would have outsized returns, but maybe for some of the audience or some of the podcast hosts who don't know exactly why that is it because a larger portfolio just gets too diversified with too much inertia so that it doesn't have the returns? Is that why a smaller fund can outperform?
Yeah, there's a few different reasons. If you're running $50 billion, the sandbox in which you play in is very, very limited. It's very limited, for instance, to mega caps like Apple, Tesla, Facebook, Amazon. Very hard to get edge on an Apple or an Amazon because there's basically, on the sell side, probably 100 different analysts covering those stocks. On the buy side, everybody and their mothers are involved already in those stocks. Very, very hard to get a differentiated opinion on that type of stuff, which means that your returns just, the ability to generate triple digit returns on those type of stocks is pretty much non-existent.
Sure.
Whereas when you're a smaller manager running, let's say $100 million or $50 million or even $300 million, you could play in a different sandbox. Your sandbox is much, much broader. You don't have to traffic in mega caps. You can traffic in small caps, mid caps, where there's not a lot of coverage. Companies that you've never even heard of before, where they can get a lot of edge.
Gotcha.
And just by nature of the fact that nobody else is looking at them, and so that's one reason. Another reason is just liquidity, because when you're running a small portfolio, you can get in and out of your positions fairly quickly. So if you're running a $50 million portfolio, a large position would be considered a 10% position, right? But that's $5 million. Right. You can get in and out of $5 million position within seconds, probably in most mid cap stocks and above. If you're running a $50 billion portfolio, right, a 10% position is $5 billion. That could take you like a month to get out of a position, literally. So there's a lot of friction costs with liquidity.
Right.
So those are a couple of reasons. There's many more, but those are a couple large reasons and prominent reasons why size is the enemy of returns.
It is intuitive when you hear it. It sounds like there's less correlation in smaller funds with what I'm buying at Betterment or Wealthfront in like a diversified ETF
Yeah.
because they have that
And you
those
remember your ETF is generally only long stuff, right? So
right.
you're betting on the underlying assets going up in price. But what happens in a market like this? The markets are down 20%, your portfolio is going to go down with it, essentially.
Mhm.
However, some of the, for instance, hedge funds that we have on our platform, most of them hedge. They're long short equity funds. Some of them run with no exposure to the market. And what I mean by that is if they buy $100 of Pepsi, then they're short another $100 of Coca-Cola trying to play that spread. So they actually have net 0% exposure to the market. So their ability to generate returns then is based on their skill. It's
Mm.
called alpha,
Yeah.
and so that's why you need to go into alternatives to actually get true diversification, things that don't go down and potentially go up when the markets actually collapse.
Yeah, it makes a lot of sense. Is Prometheus just for accredited investors, or do you see? And I know you're even getting into like the lower end of accredited investors is a green field that hasn't really been approached. But do you think that this type of investment strategy, getting this diversification, is something that will open up to the broader retail market in the coming years?
The answer is yes, but we do need help from regulations.
Mm-hmm.
So the industry, the alts industry, the investment industry in general, is regulated by some of these very archaic acts. We're talking about like the Securities Act of 1933 and 1940, the Investment Company Act of 1940. I mean, listen, FDR was president, when these acts were created. Things have changed in the last 70, 80 years, and the laws haven't, and laws need to change to allow retail to have participation in this great asset class because there is no rational reason in my mind why a retail investor could lever up, borrow as much money as he or she wants to buy whatever Dogecoin or altcoin they want to and gamble their life savings away, but they can't invest in a low volatility, uncorrelated hedge fund,
Right.
that generates consistent, mid-teens returns. Like that makes absolutely no sense to me whatsoever, And so I think that we do need help from the SEC to make changes to the law to accommodate a broader set of investors. Now, that being said, though, on our platform, there's two aspects of it, right? There's the social and then there's the marketplace. The social is available for anybody to join, you know. So in lieu of regulatory changes, the next best thing is education. All right, let me learn how to invest properly from some of the best investors in the world versus learning how to speculate by going on Wall Street bets and making a bet based on emojis and rocket ships and moons, And so that education component, the content component, that's available for anybody to digest. It's where you can go to for free and interact and engage with some of these pros. The marketplace, however, right now it's generally only available to accredited investors and above, just because of regulatory reasons. However, there are sort of new structures, or maybe they're not new, but less well-known structures that funds are using to be able to accommodate an unaccredited investor, and so we're exploring that. So in due time, we'll have alternative products available also to the unaccredited investor. There's not a lot of them, but we're going to have some.
Yeah, that's awesome. And it sounds like you're in favor of changing the rules. And when that occurs, you'd be right at the forefront of helping anybody who wanted to get connected.
Absolutely, 100%.
Yeah, I like that. Can you talk about what you mentioned some of the things you're adding? You're working on adding things, some of these special products that alt investors have, things like that. What else are you building on the platform? Like what's coming next for Prometheus?
Sure. So right now, Prometheus is invite only, and we just launched a few months ago. But however, your listeners, they can get access exclusively. Skip the wait list. Use the code BIRD, BIRD, and you'll be able to get access to Prometheus in a heartbeat. So in terms of some of the different features, so right now we have the social, we have the marketplace. One of the things that I'm most excited about is creating groups. So think of these as chat rooms that, you maybe, a pro can create a chat room, Tesla bulls and bears, and have a thoughtful discussion about the merits of, Tesla with some of the, page one shareholders of Tesla, right? You can create a group of, private deals for, family offices or something like that, right? And so those folks can speak to each other. But what's also interesting is we're going to allow people to create paid groups as well. So this is going to allow the thousands and thousands of financial content creators out there that maybe write on Substack or Medium to be able to monetize their audience in a chat room. So right now you write on Substack, or maybe you do a podcast, right? It's a one-way street. You write a newsletter, somebody pays $10 a month for it, and but there's no two-way street interaction. But on Prometheus, you'll be able to create a paid group chat, charge $15 a month or whatever you want, and allow your clientele to interact with you on a daily basis. So that's one feature that I think is going to be really compelling for folks, and also great for financial content creators that are out there.
Right. It sounds like you're all about alt investing, but that sounds like an alt community too. The current options I have are it's just a broad category of Wall Street bets, retail investors. I can get involved in chatting there. But if I can get involved in a community of true experts, it sounds like a big advantage to the folks who are involved in those groups.
No, that's exactly it. One of the reasons why we came up with this idea for a social platform built around pros is that during the pandemic, what was one positive thing about the pandemic is that it made investing culturally relevant. People were at home, they got some stimulus checks, and then they started looking into investing, right? So I think that's great, just making investing culturally relevant. The negative side of that is that where do they all go to get their investment insights? Well, they go to Wall Street Bets and they go to StockTwits, and they're literally making bets on emojis and just whatever some anonymous kid is pitching that day. I mean, some of these people, by the way, they spend more time researching what dishwasher they're going to buy than they do making bets on stocks like GameStop and AMC and stuff like that. So they're teaching people how to speculate on these other platforms. So I want to create a platform instead of teaching people how to speculate. Well, why don't you learn the fundamentals of investing? There's no better way to learn about investing fundamentals than from some of these pros. So,
right.
But this is why we also had to attach that marketplace to the social, is because the pros also needed an incentive to spend time to post content, right? An incentive is clear by having that marketplace there. Is, hey, the more often you post, the better content quality you put out there, the more likely it is that you're going to raise capital and raise your profile.
Right. So there's two problems that when you put them together solve each other. Problem is the investment professional can't get access to the capital, and the capital can't get access to the investment professional. So if you have the merging of the two where you can connect with an investor and you can also promote yourself, you solve the whole problem in one shot.
Exactly.
Yeah, I think I get it. Thank you so much for coming on the show. This is a different idea, something I haven't heard before, something I haven't thought about. Everybody who's listening, it's PrometheusAlts.com if you want to check it out. You heard the special code if you want to skip the line and get in there. Thanks for coming on the show. Thanks for the special offer, and thanks for telling us about your platform, Michael. It's a real pleasure.
Absolutely, yeah. And we have an iOS Apple app that you can download in the App Store. Again, use the code BIRD, and you can create a free account in about 10 seconds. So,
awesome. Thank you.
All right. Thanks, Andrew.